This is the last slide.
Kona Grill was created in 2002 by a group of finance and real estate professionals. They had great success despite a lack of restaurant industry experience, growing the Kona concept from 3 to 20 stores in 6 years. In 2008, the financial crisis hit. The crisis exposed weak management and poor corporate governance, which nearly bankrupted the company. Shareholders revolted, fired the founding CEO, Marcus Junt, and changed the board of directors. The company floundered with no one at the helm, suspending restaurant expansion. After 4 years of anchoring, Kona has finally righted its ship, and coordinates are set to new store growth. With the right captain, a solid vessel, and a motivated crew, it's time to get on board.
Good evening. It's my pleasure to introduce the UNLV student research team. Jeffrey Zemp, Elias Gilan, Sean Skinner, and myself, Warren Stender. We'd also like to thank the judges for your time this evening. We initiate Kona Grill with a buy and a 12-month price target of $12.72, a 50% upside from Monday's closing price. Our valuation is based on a 3-part analysis, which includes a discounted cash flow analysis, an EV to EBITDA valuation, and a precedent transaction analysis. We weighted these approaches 40, 40, and 20% respectively. Given the importance of management to any company's success, we also performed a management assessment and a corporate governance analysis. Our research dug deep into Kona's past, explored their transition period, and examined their most probable future. Our extensive research produced 3 specific reasons why you should buy Kona Grill. First, economic conditions for the polished casual restaurant industry, and more specifically, Kona's target market, are improving. Second, our models demonstrate that Kona is significantly undervalued. The catalysts that drive our valuations are M&A activity and new store growth. Finally, as Jeff mentioned, management has improved. They have a firm footing with the experience, focus, and commitment to reignite growth. Today, they are capitalizing on several new and exciting opportunities. As a company, Kona Grill currently owns and operates 23 polished casual restaurants in 16 states, where it utilizes over 40 signature sauces to produce American-style food, variations of international cuisine, and sushi. The typical Kona restaurant seats about 300 customers and is divided into 4 very important parts: the main dining area, a full-service bar, an outdoor patio, and a sushi bar. This layout offers multiple forms of dining, thereby generating business during hours when competitors are typically slow. This additional business pushes sushi and alcohol sales in excess of 50% of total sales. Robust sushi and alcohol sales generate higher profit margins and help protect against rising food costs.
The first reason you should buy Kona Grill is improving economic conditions. The polished restaurant industry's target customer is between the ages of 25 and 55, educated with at least a bachelor's degree, and has a minimum household income of $65,000. Our research done by zip code of each Kona location suggests the average median age of Kona customers is 35. They have an average median income of $62,000, and 45% have a college degree. Our proprietary research on the polished restaurant industry suggests 4 key drivers that are sensitive to the business cycle and prevailing economic conditions: disposable income, consumer spending, consumer sentiment, and household earnings over $100,000. As the U.S. economy recovers and unemployment levels drop, these drivers should gradually increase and provide increased expenditures on restaurant dining. Significant pent-up demand indicates Kona's target customer base will continue to grow. Pent-up demand is defined as households not eating at full-service restaurants as often as they would like. From 2007 to 2012, there was a 7% increase in pent-up demand for households earning over $75,000. For the 50 to 75,000 bracket, the amount increased by 13%. Each 1% increase in sales increases Kona's net profit by 1.4%. We believe this pent-up demand should gradually decrease over the next 5 years and provide an enormous tailwind for both the polished restaurant industry and Kona Grill. Since December 2007, food costs have increased at an annualized rate of 5.6%. While the industry as a whole has managed to maintain food and alcohol costs at 26% of sales, Kona has actually managed to decrease food and alcohol costs as a percentage of sales by 1.5%. Currently, Kona is experiencing cost relief due to 80% of the revenue coming from sushi, seafood, and alcohol, all of which are inflating at slower rates than non-seafood costs. As you can see, only about 20% of Kona's revenue is exposed to the same inflationary food forces as its other restaurant industry participants. These improving economic conditions support our reason to buy Kona Grill.
The second reason you should buy Kona Grill is its 50% discount to fair value. We derived our target price of $12.72 using 3 valuation methods: a discounted cash flow analysis, an EV to EBITDA multiple, and a precedent transaction analysis. Our base case values are $9.60, $14.18, and $14.67. We used a discounted cash flow model because it accurately represents Kona's growth in free cash flow. You can see our projections on the slide. We used a weighted average cost of capital of 7.95% and a terminal growth rate of 2%. Second, we used a 2017 EV to EBITDA exit multiple of 6 to conservatively value Kona with respect to historical restaurant valuations. We arrived at a future market cap of $180 million by subtracting debt and adding cash to the enterprise value, yielding a fair value of $14.18 per share. Third, significant M&A activity in the polished restaurant sector supports a precedent transaction analysis. We believe that Kona's concept, net cash, strong cash flows, and unit economics similar to other recently acquired companies makes it an attractive acquisition target. Historically, restaurants have been taken private at an EV to EBITDA multiple of 10.3. Over the last 12 months, it's slightly higher at 10.7. In an acquisition, we believe that Kona could be worth $14.66 per share, or at least 60% more than it is today. From a different perspective, we calculated the value of an individual Kona restaurant to be 36 cents per share. The saturation point for a polished casual brand is 150 domestic stores, and we believe Kona will reach this between 2021 and 2026. This implies a future value of $54 per share. Discounted at 8%, we arrive at a fair value of $20 to $30. Finally, the 2 catalysts that are going to drive our 12-month 50% appreciation are M&A activity and new store growth. Once the market realizes that Kona is a growth stock and not a value stock, the price should jump to fair value. Kona hasn't opened a store in 3 years, but they've recently announced 2 new openings later this year, and our research has uncovered 4 openings next year. As we've demonstrated, Kona is highly undervalued and could appreciate at any moment, which makes it a strong buy today.
Lastly, management is new and improved. We evaluated management in the areas of effectiveness of employee relations, strategic management, and corporate governance. Our research shows that current management is highly effective, strategically appropriate, and corporate governance is shareholder friendly. To quantify the effectiveness of management, we used a management value-added technique adapted from Dr. Paul Strasman's return on management calculation. Since current management took over in 2012, Kona has generated 43 cents per share management value add, which compares with an average of negative 57 cents per share per year from former CEO John Serra. This analysis confirms our hypothesis of previously poor management and superior management today. We believe there are 3 primary risk-facing investors. First, Kona is sensitive to consumer spending. If the economy declines, Kona should be negatively impacted. For every 100 basis point change in sales, profit is impacted by 140 basis points. Second, a significant portion of Kona's growth should come from new restaurants. If new or current restaurants fail to meet projections for revenue, profit, and sustainability, or if new store growth is curtailed, our target price will be affected. Lastly, food costs, which accounts for 26% of sales, is subject to inflation and volatility, which, if excessive, would negatively impact margins. To conclude, at a current share price of $8.83, with a projected 50% upside, improving economic conditions, 2 under-acknowledged catalysts, and a new and focused management team, Kona Grill offers a strong investment proposition today. Thank you. We're happy to take your questions.